And thank you so much for joining me here today. I'm Don Ma. We'll start off the show today with some China news. Chinese developer Country Garden, a major Chinese developer, has been deemed in default on a U.S. dollar bond for the first time. This is according to Bloomberg News on Wednesday, citing a notice. Country Garden's failure to pay interest on the note within a grace period ended last week, and this constitutes as an event of default. Bloomberg reported, citing the notice to holders from a trustee. A grace period ended last Wednesday as Country Garden was due to settle a $15 million coupon payment on a bond due in September 2025. Non-payment would put the developer at risk of default on its nearly $11 billion of outstanding offshore bonds and could trigger one of China's biggest corporate debt restructurings. In California, Governor Gavin Newsom met with China's leader Xi Jinping in Beijing today. Newsom is on a week-long tour of China to push for climate cooperation. Xi told Newsom that the connection between China and California was, quote, very close. Newsom's trip is drawing attention as it comes amid heightened tensions between the U.S. and China. On climate, Newsom expressed his desire for continued collaboration and partnership. Newsom's meeting with Chinese President Xi Jinping comes after his remarks in Hong Kong earlier that California will always be a partner with China on climate issues. Governor Gavin Newsom also visited Israel and is working to send humanitarian aid to Israel and Gaza. NTD's David Lam reports.
California Governor Gavin Newsom visited Israel recently before heading to China. Newsom assured during his week-long trip to China that his state will always be a partner on climate issues, no matter how the U.S. presidential election turns out.
After I'm gone, I promise you, Democrat or Republican, you're going to have someone that's there for the long haul on these issues, that believes foundationally these issues. I want you to know, regardless of what happens nationally, subnationally, you have a partner in the state of California.
Newsom's visit to University of Hong Kong on Monday comes as U.S.-China relations witnessed a sharp decline in recent years due to trade disputes, U.S. support for self-governing Taiwan, and other human rights concerns, among other issues. Before his China trip, he visited the Tel Aviv Sourasky Medical Center in Israel on Friday, meeting with survivors, families, and others, including those from California impacted by the Israel-Hamas war. Newsom said, "Despite the horror, what I saw and heard from the people of Israel was a profound sense of resilience, a commitment to community and common purpose, especially in these most difficult of times." According to Newsom's office, California is working to ship medical supplies to support humanitarian relief efforts in Israel and Gaza. David Lam, NTD News, California.
Meanwhile, Taiwan's vice president on Tuesday hit out at China over its probe of major Apple supplier Foxconn, saying Beijing should cherish Taiwanese companies and not put pressure on them during an election. Take a look.
Taiwan's presidential frontrunner on Tuesday blasted China over its probe of Taiwanese major Apple supplier, Foxconn. Vice President Lai Ching-te said Beijing should cherish Taiwanese companies and not put pressure on them to declare a political position during an election. Sources said Foxconn is facing a tax probe in China, which confirmed a report from the country's state-backed media, the Global Times. These sources said they believed the probe into iPhone assembler Foxconn was publicised for political reasons and is tied to Taiwan's January elections, where the company's founder, Terry Gou, is running as an independent candidate for president. The Global Times said by running, Gou might split the opposition vote, potentially ensuring a victory for Lai, who is already leading in the polls. Beijing detests Lai. China claims Taiwan as its own territory, and it believes he is a separatist. Lai said that if China continues to pressurise Taiwanese companies, they'll lose confidence and move production elsewhere. Foxconn founder Gou has not commented on the probe, but the company said in a statement that legal compliance was a fundamental principle of its operations and that they would fully cooperate with the investigation.
Now, a recap of markets. All three major U.S. stock indexes advanced on Tuesday, with interest rate-sensitive mega caps providing much of the upside lift, as benchmark Treasury yields held steady, comfortably below their recent spike to 5%. Here's the recap.
Wall Street's main indexes ended higher on Tuesday as a string of solid corporate earnings and upbeat forecasts sparked a broad rally. The Dow gained more than 0.6%, the S&P 500 added more than 0.7%, and the Nasdaq climbed over 0.9%. Sam Stovall, chief investment strategist at CFRA Research, credits an easing of the benchmark 10-year Treasury yield after spiking to 5% the day before.
I think investors are of the mindset that maybe this yield has peaked, at least for the near term. Add to that a week in which a third of the companies in the S&P 500 are going to report earnings, and so far so good. The companies that have reported in these first 2 days have come in better than expected, and I think that's setting the tone for the rest of the week.
Reporting after the bell, Alphabet topped quarterly earnings and revenue estimates, but its cloud division missed revenue estimates, sending its shares down more than 4% in after-hours trading. Microsoft, by contrast, beat quarterly estimates in all segments, driven by strength in its cloud computing and PC businesses. Shares climbed more than 3.5% after the close. In other earnings news, Verizon surged more than 9% after raising its annual free cash flow forecast, while General Electric rose 6.5% after the conglomerate lifted its full-year profit forecast. And Coca-Cola hiked its annual sales outlook, sending its stock up nearly 3%, while 3M rose more than 5% on the heels of its upbeat quarterly report.
And Russia's parliament took the first step on Tuesday towards revoking ratification of the Comprehensive Nuclear Test Ban Treaty. Now, why is Russia changing its position, and what might the move mean? Let's take a look.
Russia is making moves to scrap its ratification of the Comprehensive Nuclear Test Ban Treaty. On Tuesday, the country's lower house voted unanimously in the first of three ballots to approve withdrawal of the ratification. Moscow says the aim is to restore parity with the United States, which has signed but never ratified the treaty. But experts worry this walkback could be a sign Russia is ramping up towards a test. The CNTB was formed in 1996 and bans nuclear weapon test explosions or any other nuclear explosions. The goal to reduce and eliminate the development of nuclear arms. 187 states have signed the treaty, with 178 passing corresponding laws in their parliament. Of the 9 countries that possess nuclear weapons, Britain, France and Russia have signed and ratified the agreement. The US, Israel and China have signed but not ratified, with India, Pakistan and North Korea yet to do either. The treaty can only legally come into force once 44 named countries, which possess nuclear weapons or have nuclear power and research reactors, have signed and ratified. But in practice, it has created a de facto norm against nuclear testing. Russian President Vladimir Putin has stated the decision to withdraw its ratification is to mirror the current status of the CTBT in the United States. It's another move that heightens tensions between the countries since the start of the Ukraine war. Moscow suspended its last remaining nuclear arms treaty with the US in February, and Putin has moved tactical nuclear missiles to Belarus on Ukraine's border. No country except North Korea has tested a nuclear weapon since the 1990s. The move to pull away from the CTBT gives Russia legal cover to test if it wanted to. But it says it's not a statement of intent and that it won't test unless the US does. It is also committed to continue supplying data to the global monitoring system, which alerts the world to any nuclear test. However, security analysts believe Putin could be keeping the option open in case the country's fortunes in Ukraine worsen, to send a dramatic signal for the West to back off.
Meanwhile, dozens of U.S. states on Tuesday filed lawsuits against Meta Platforms and its Instagram unit, accusing them of fueling a youth mental health crisis by intentionally making their social media platforms addictive. Here's the report.
Dozens of U.S. states are suing Instagram and its parent company Meta, accusing them of fueling a mental health crisis among young people with their addictive social media platforms. In one of the lawsuits, the attorneys general of 33 states filed a joint complaint in the Oakland, California federal court on Tuesday, including New Jersey's Matt Platkin.
I'm joining dozens of other attorneys general across the United States in a massive undertaking to once and for all hold Meta, the parent company of Facebook and Instagram, and its CEO, Mark Zuckerberg, accountable for the deceptive practices and years of harm they have brought upon our young people.
According to the court filing, they are accusing Meta of repeatedly misleading the public about the dangers of its platforms and knowingly inducing children and teenagers into compulsive social media use to, quote, maximize its financial gains.
There needs to be more transparency.
Much of the lawsuit stems from a whistleblower's release of documents in 2021 that showed the company knew Instagram, which began as a photo sharing app, was addictive. And it points to research that has linked children's use of Meta's social media platforms with depression, anxiety, insomnia, interference with education and daily life, and many other negative outcomes. Meta said in a statement it was disappointed that the states chose to sue, quote, instead of working productively with companies across the industry to create clear, age-appropriate standards for the many apps teens use. 8 other U.S. states and Washington, D.C. filed similar lawsuits against Meta in other courts on Tuesday. That means, in total, 42 jurisdictions are taking action against the California-based company. Meta could face civil penalties of up to $50,000 for each violation of various state laws. It's an amount that could add up quickly, given the millions of children and teenagers who use Instagram.
And the United Auto Workers Union struck a General Motors assembly plant in Texas, which builds the U.S. automaker's profitable full-size sports utility vehicles in another significant expansion of the strike. Take a look.
The U.S. auto strike has ratcheted up another notch. On Tuesday, the Union of Auto Workers called a walkout at the General Motors assembly plant in Arlington, Texas. It makes some of the firm's most profitable vehicles, including Cadillac Escalade SUVs. GM said the stoppage meant the dispute would now cost it $400 million per week, double the previous figure. It's furloughed more workers as a result, with the total now standing at 2,460. The new walkout follows a similar move earlier in the week at a key pickup plant operated by Chrysler parent Stellantis. Workers have also gone on strike at Ford's biggest factory. Analysts say the moves target the industry's top-selling vehicles, raising the stakes for Detroit's big names. Now negotiations continue at all 3 firms, with none saying they've hit a total impasse. UAW President Shawn Fain says strong earnings figures reported this week by GM prove that the companies can afford big pay rises. Last week, he said the trio had converged on a 23% wage hike offer, though GM and Ford said other cost-of-living measures took the total increase to over 30%. Fain has urged union members not to be swayed by that, saying there is more to be won. That leaves it unclear how far apart the union and automakers now really are. Consultants this week estimated that the strike's total cost to the industry had surpassed $9.3 billion.
And the Consumer Protection Bureau says Americans paid $105 billion in credit card interest alone last year. According to the report, Americans also shelled out $25 billion in fees last year as borrowing costs hit record highs. The Bureau warns that nearly a tenth of credit card users end up in persistent debt. That's when they're charged more in interest and fees than they paid towards principal. The CFPB also found consumers who carried debt from month to month paid more in interest and in fees than they earned in rewards. And Google parent Alphabet's cloud business suffered as longtime rival Microsoft took off in the September quarter, demonstrating early signs that the Windows maker's investment in artificial intelligence was paying off. Here's more.
AI is proving to be a mixed blessing for big tech. Nearly a year after the launch of ChatGPT, Microsoft is enjoying a boom. Analysts say it's benefited from aggressive investment in the technology, which includes backing the chatbot's maker, OpenAI. The tech titan has embedded artificial intelligence across its products, from its Office software to its search engine Bing. Numbers out Tuesday showed revenue soaring to more than $24 billion at its cloud unit over the latest quarter. That beat analyst forecasts, with one calling the numbers absolutely phenomenal. Microsoft also topped estimates for overall revenue, which rose to more than $56 billion. But it was a different story over at Google parent Alphabet. Cloud revenue there rose by around a fifth to just over $8.4 billion. That was its slowest pace of growth in at least 11 quarters and lagged Wall Street estimates. The search giant did, however, beat estimates on profit and sales. But that didn't satisfy investors, who worry it's now lagging on AI and cloud services. Alphabet shares dropped as much as 7% in US after-hours trade, while Microsoft jumped as much as 5%.
And staying with Microsoft, the company said it will spend $3.2 billion expanding its artificial intelligence and cloud computing abilities in Australia over 2 years. And this is to improve capacity by 250%. Here's more.
Microsoft said it would spend $3.2 billion expanding its artificial intelligence and cloud computing abilities in Australia. The 2-year investment's part of a wide-ranging effort that includes skills training and cybersecurity. The spending announcement amounts to a charm offensive by Microsoft in a country that has begun public consultation over AI regulation, since Microsoft-backed OpenAI stunned the technology world with lifelike language program ChatGPT in 2022. The US tech giant said it would raise its computing capacity in Australia by 250%. This would enable the world's number 13 economy to meet demand for cloud computing, which was expected to double from 2022 to 2026 as AI became more prevalent. Microsoft also pledged to expand a cyber threat information sharing agreement with the country's cybersecurity agency, the Australian Signals Directorate, and would support training 300,000 Australians in skills needed to succeed in the digital economy. It also said it would expand its data centre footprint in Australia from 20 sites to 29. Australia has no AI-specific regulation, but human rights groups have said the technology must have some guardrails to protect against bias, copyright infringement and privacy breach.
And California issued a new order asking General Motors' Cruise unit to remove its driverless cars from state roads, calling the vehicles a risk to the public, and saying the company has misrepresented the safety of the technology. Take a look.
California's Department of Motor Vehicles suspended GM's self-driving car company Cruise on Tuesday, ordering its robotaxis off the road in San Francisco because they posed a, quote, unreasonable risk to public safety. That's according to a statement from the state's DMV that said Cruise had misrepresented information related to the safety of its autonomous technology. The suspension, effective immediately, is a major setback for General Motors and comes after a series of accidents involving Cruise vehicles. Cruise said the DMV reviewed an incident on October 2nd when one of its self-driving vehicles was putting on the brakes but did not avoid striking a pedestrian who had previously been struck by a hit-and-run driver. Cruise said that in that incident, a human driver, quote, tragically struck and propelled the pedestrian into the path of the autonomous vehicle, which struck the pedestrian. GM CEO Mary Barra, who has previously said Cruise represents a giant growth opportunity, said its robotaxis have better safety records than human drivers. Shares of GM ended more than 2% lower on Tuesday.
And Chevron announced that it's going to buy smaller rival Hess Corp in a $53 billion all-stock deal. This is as the oil major looks to increase its footprint in oil-rich Guyana. Here's the report.
Chevron agreed on Monday to buy US oil and gas producer Hess in a $53 billion all-stock deal. That's as the oil major looks to increase its footprint in oil-rich Guyana. The deal is another consolidating step for the US energy sector and puts Chevron level with rival ExxonMobil. It comes less than 2 weeks after Exxon agreed to buy Pioneer Natural Resources in a $60 billion deal, making it a dominant figure in the US shale oil industry. These supermajors are now head-to-head in two of the world's fastest-growing oil basins, shale and Guyana. Guyana has become a major oil producer in recent years after huge discoveries by ExxonMobil, Hess and China's CNOO. Together, they produce 400,000 barrels per day from 2 offshore vessels, with the prospect of 8 more projects. Chevron is offering $171 for every Hess share, a premium of around 5% on the share's last close. Hess chief John Hess is expected to join Chevron's board of directors once the deal closes around the first half of 2024.
And it seems like cryptocurrency's role in terrorist financing and funding militant groups has come under renewed scrutiny following a deadly attack in Israel by Palestinian militant group Hamas. Here's what you need to know.
There has been a lot of focus on how crypto is used to fund terrorist organizations and militant groups. So since the Palestinian militant group Hamas launched an attack on Israel at the start of October, the role of crypto in funding militant groups and terror organizations has really come into the spotlight. Hamas itself has been known to raise money via cryptocurrencies. Over the past few weeks, the Israelis have frozen several cryptocurrency wallets it said were linked to Hamas. Many people say that crypto is an extremely useful tool for these kind of organizations. It's largely anonymous. The money that anyone sends over the blockchain, that's the technology that underpins cryptocurrency, is usually just identified by a string of letters and numbers. It's difficult to track, and this means that for militant groups or terrorists seeking to raise money, crypto has become a very popular tool. Now, it's not completely anonymous. Cryptocurrency companies, that means exchanges, as well as law enforcement organizations, can actually work out who is sending the money, but it takes a bit of work for them to do that. The United Nations officials said in 2022 that about 5% of terror attacks were considered to be financed by cryptocurrencies. A variety of cryptocurrencies are known to be used by terrorist groups and militant groups to raise funds. That said, while Bitcoin is popular, stablecoins, that's a type of cryptocurrency that's designed to keep a very steady value, have become more popular in recent years. There are also a number of other sources that these groups use to raise funds. That's anything from charities, shell companies, investments overseas to also raise funds. So crypto is definitely part of the mix, but it's very difficult to say exactly what proportion.
And many working Americans are, or will be soon, choosing their employer-provided health plan during open enrollment. But locking in affordable health care may be tough to do as premiums soar. And many families are facing hundreds of dollars more out of pocket for the same coverage they had before. Here's more on what to consider when making your health care plan selection.
The cost of family health insurance is basically the cost of a new car, a new small car, but still a new car.
Matthew Ray co-authored KFF's recent survey on employer health benefits. He says the average annual family plan now costs nearly $24,000, and workers are paying more for their share after their companies foot the rest of the bill.
So to enroll a family of 4, on average, you're paying about $6,500. Workers at smaller firms are paying more than $12,000.
Those price points represent an average increase of around $500. For single coverage, the tab for employees is about $1,400 a year, a $75 bump. But Ray does have some pointers on choosing a healthcare plan going forward.
If you anticipate having health needs, if you have chronic health conditions, then you may want to have a plan with lower cost sharing. That's lower deductibles, copays, and co-insurances. Alternatively, if you're relatively healthy, you may want to pay less money up front, and you may want to go for a plan that has a lower premium contribution.
There's also the annual out-of-pocket maximum, and once that's met, most plans cover services 100% for the rest of the year.
If you think you're going to have a big expense of the year with multiple services, then an out-of-pocket maximum will kind of protect you from having huge expenses.
And protection from huge expenses is one choice everyone would like to make.
And as the Israel-Hamas war continues, concerns are growing that a wider conflict in the oil-rich region could further tighten global oil supplies. What could this mean for prices at the pump heading into the winter? Take a look.
Israel's military ramping up its aerial offensive against Hamas as the war enters its third week. And now, growing concerns of significant escalation in the region.
Well, we have seen some worrisome attacks, and we got to do what we got to do to protect our troops on the ground, particularly in Iraq and Syria.
While neither Israel nor Gaza is a significant oil supplier, concerns the conflict will broaden to other countries in the region are driving investor fears of a possible tightening on global oil supplies.
Especially if Iran gets involved. Iran is a major oil producer. And if they embargo oil or cut exports, that could weigh more heavily on oil prices.
Brent crude oil prices opened at above $91 Monday, the international oil benchmark. So far, the fluctuations have not impacted gas pumps.
A lot of the seasonality that's pushing prices down is really winning that tug of war, and that's helping to keep gasoline prices declining, even as oil prices have gone up.
Patrick DeHaan with Gas Buddy says cheaper winter gas blends combined with decreased demand are helping to keep prices low.
The national average now below $3.50 a gallon for the first time since July 5th. And by later this week, the national average could fall to its lowest level since March.
And that's all we have for you today on NTD Business. Thank you for watching, and we'll see you next time.